94, lower by 1.2%, and the Nasdaq Composite Index is down now by 1.1%. 10-year yield 4.28% with a 2-year 4.65%. Big move for spot gold right now, down 2.1% to $2,000, 28 on spot gold. Bitcoin at 41,903, bouncing around, but earlier today was trading above 42,000. Bitcoin now up by 5.5%. And West Texas Intermediate crude down 1.4%, 73.05 a barrel. There is another dose of negative news on American manufacturing. And with that story, here's Bloomberg's Vinny Del Giudice.
Factory orders are down. October's 3.6% drop is the sharpest since April 2020 when the pandemic struck. Commercial aircraft accounted for much of the weakness. However, businesses are also towing the line on inventories as the economy moderates. Interest rates are also an issue. Vinny Del Giudice, Bloomberg Radio.
Well, Peter Cheer was mentioning NVIDIA, and corporate insiders are increasingly betting on shares of their own firms. Bosses at the S&P 500's best-performing company, though, are cashing in. NVIDIA executives and directors last month sold or filed paperwork showing they intend to sell roughly 370,000 shares worth about $180 million. This according to data compiled by the Washington service. NVIDIA right now down 3.1%. Again, recapping, stocks lower, S&P down 32, drop there of 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
It will not likely be fun tomorrow for Claudine Gay or her counterparts at MIT and at Penn as the Harvard president testifies in a congressional hearing into anti-Semitism spreading across college campuses. You've heard about this. Gay has been criticized severely and in some pretty high-profile places by very well-known alumni for initially denouncing more than 30 student groups who blamed the October attacks in Israel on Israel, did not condemn Hamas. And there's, of course, been a lot more where this came from here. The great story on the terminal from Janet Lauren. Harvard alums make $1 donations in rebuke over anti-Semitism. She's with us now from World Headquarters in New York. Bloomberg's higher education finance reporter, Janet Lauren. It's good to see you, Janet. What do you expect to come, if anything, from this hearing tomorrow, or is this going to be more of an airing of grievances from lawmakers?
Well, and before we get to the hearing, Claudine Gay was also rebuked by somebody who had the post of leading Harvard, Larry Summers. So it's, she's hearing a lot of criticism from many different camps. And tomorrow, the committee has called Claudine Gay and her counterparts at MIT and Penn. I'm not sure we're going to hear any new news from the schools, but I think you're going to hear from Congress members who are very upset about what they see at college campuses, protests that are not really what has been described as not free speech, but hate speech that causes students not to learn, that causes students to feel uncomfortable in classrooms, that causes them not to want to go to the dining halls. And I think that is of concern to members of Congress, considering how much federal money all these colleges get from the federal government. They get tax breaks from their donors. They get huge amounts of money in research funding. And, all this is potentially on the line at some point.
Yep, donations on the line, reputations on the line. But what are lawmakers asking, if anything? Are they asking for policy changes on campuses or just do a better job listening?
Well, I think they're concerned about students being protected, and they're allowed to not be protected in some ways where they don't want to go out of their dorm rooms, and condemning these consistent protests. And I think they would like to see some action rather than creating task forces. At least that's what we're hearing about the committee tomorrow.
Harvard enjoys a $51 billion endowment. Its real estate holdings are epic. The story that you've got here, though, of alumni making $1 donations to make a point, how far is this going?
Well, so far it's hundreds of people that we know of, but then we have an alum who is working to change his will. And, some things that come into the Harvard Development Office are bequests, and we don't know how many people are making that decision. And, this could have reverberations for not just the next couple of months, but years and decades as alumni are angry and upset.
Is the issue at Harvard as intense on campus at MIT, at Penn, or are these different situations?
Well, I think they're all similar situations where the students there are continuing protests, and Penn, we just saw photos of vandalism on signs, and MIT had their own issues with protests a few weeks ago. And I think the tenor for some of these campuses is, why does this continue? Why is there such a failure of moral leadership as you keep hearing that phrase from alumni, from Congress members. Even Mitt Romney, who went to the Harvard Business School, had a very strong rebuke about a month ago. And it continues.
Well, that's the thing. We hear about the Mitt Romneys. Bill Ackman hasn't let this go. He was tweeting about it just as recently as today, or I guess it was yesterday.
Yes.
How many more are there beyond, the billionaires who are getting in the news?
Well, we don't know what the private conversations are going behind the scenes. Not everyone wants to, include a very long and detailed letter like Bill Ackman. But we just don't know what's going on behind the scenes. And again, why the criticism is, these protests are continuing, and it's also in the classroom, and students are feeling uncomfortable.
Mm-hmm. We're spending time with Janet Lauren, World Headquarters in New York. She covers higher education finance for us. The situation at Harvard goes beyond the matter of anti-Semitism. Claudine Gay is also left with this Supreme Court ruling. In fact, it happened a couple of days before she started the job against Harvard's use of race in admissions. This has been a very difficult road for Claudine Gay so far. How is she doing with that aspect? Is Harvard working up new policies that we haven't heard about yet?
Well, as we reported earlier, they've changed essay questions, but this is also a pretty unprecedented time for admissions because they're very committed to having a diverse class, and they're not allowed by law to ask certain questions anymore. They're very strongly committed. In fact, when we had reported their response almost bordered on defiance that they wanted to be able to keep diversity. It was a very strong tenet for them. And then also you had a complaint filed by the by groups to the education department shortly after this that criticized Harvard for its policy of legacy admissions. So they're still paying the endowment tax, which also came from Republicans. So it's not been an easy couple of months. And I just wanted to point your attention to one comment that was in our story that alumni are saying for the first time they feel embarrassed of having a Harvard degree instead of proud. And people have relationships for decades, and this is now what their feelings are about their alma mater.
Is she at risk of losing her job?
That I don't know. I mean, I think she still has strong faculty support. But I don't know. I think a lot of people will be tuning in tomorrow. There's some sympathy that this happened just very shortly after she took the reins over at Harvard. But you walk over to the Harvard.
I'm sure this will all come up.
Yes.
In what could be a difficult hearing. Janet Lauren, many thanks for helping us get ready for it. We'll be talking about this at this time tomorrow. That hearing set for Tuesday in Washington. She's Bloomberg's higher education finance reporter. Many thanks to Janet Lauren. The hearing tomorrow morning. I'm Joe Matthew in the Capitol. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got Starbucks shares lower again today, down another 1.5%, extending their losing streak for an 11th session, which will be the longest rout on record for the coffee retailer. JP Morgan analyst John Ivanko flags that alternative sales data signals a material slowing in November. Starbucks did rally in the first half of the month after management issued better than expected quarterly results and a bullish forecast for fiscal 2024, but the stock has fallen in the past 2 weeks amid concern about still slow China data. Again, we've got Starbucks now down by just about 1.4%. There will be approval headwinds ahead as Hawaiian Airlines Holdings agrees to be acquired by Alaska Group. Helene Becker is an airline analyst with Cowen and Company.
For people who live in the islands, they do tend to go either inter-island or to the West Coast. They don't really reach too much into the mainland, and if they want to, it's usually more than a one-stop flight. For Alaska, it gives them the opportunity to be bigger. I think the combined airline will have over 300 aircraft.
It would also capture more than 50% of Hawaii's airline market. We've got shares of Hawaiian up now by 190%, Alaska down by 14%. Those are our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Donald Trump now says the whole story from Liz Cheney that Kevin McCarthy went to visit him after the election at Mar-a-Lago because he was not eating is not true. He says he was eating too much. We'll have more on that ahead after we check world and national news with Nancy Lyons. She's in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Israel is moving tanks and troops into Gaza following last week's end of a temporary truce. The focus from the Israelis is no longer just northern Gaza, but also southern Gaza, where many civilians were previously moved to avoid the conflict. Israeli Army spokesman Rear Admiral Daniel Hagari says Hamas is the reason the fighting has resumed, and he's promising Israeli forces will do what they can to minimize Palestinian civilian casualties.
We pursued them in northern Gaza. We're now pursuing Hamas in southern Gaza too. We will operate in maximum force against Hamas terrorists and infrastructures while minimizing harm to the civilian that Hamas places around them as shields.
Rear Admiral Daniel Hagari says Israel is urging the Red Cross to continue pursuing access to the remaining hostages to ensure they are safe. Federal prosecutors have filed a criminal complaint accusing a former U.S. diplomat of spying for Cuba's intelligence service while holding top posts at embassies across Latin America and at the White House. Attorney General Merrick Garland says the alleged crimes by Victor Manuel Rocha date back to 1981, making it one of the longest-lasting infiltrations of the U.S. government by a foreign agent. Well, the college football playoffs are now a federal case.
Republican Senator Rick Scott of Florida is demanding answers on why the Florida State Seminoles aren't in the playoffs. FSU won the ACC championship on Saturday, ending the season with a 13-0 record. This makes it the first time an undefeated Power 5 conference champion has been kept out of the playoffs in their 10-year history. The selection committee instead went with Michigan, Washington, Texas, and Alabama. In a letter to committee chairman Boo Corrigan, Senator Scott called the decision shocking and demanded relevant communications and votes into how it was made. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe.
Hi, Nancy. Thank you. Just a big reminder here to get the latest version of the Bloomberg Business app. If it's not on your phone right now, and if you have an older version, this is important here, especially if you drive to work. Because Bloomberg, if you do this right, Bloomberg is in your dashboard with either Apple CarPlay or Android Auto. I won't get into that debate right now. We've got you covered either way. And it gives you access to every Bloomberg podcast, including this one. Audio forms of stories for Bloomberg News. Yeah, we'll actually read the stories on the terminal to you. And the latest headlines whenever you want them, all from Bloomberg News Now. And it's free. It's presented by our sponsor, Interactive Brokers, which makes it free to you. Again, the latest version of the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect the phone to the car. You can start it right now and not put us all at risk, including yourself while you're driving to work tomorrow, because I know what it's like. You want to grab the phone. You want to see the headlines. We'll read them to you. We'll also give you this program if you missed it the day earlier or an hour earlier, for that matter. Big news on Donald Trump. I mentioned it. I have to make sure we get this in while we're still here together, because there is a response to the story from Liz Cheney in her new book, Oath and Honor, that Kevin McCarthy went to Mar-a-Lago after January 6th to console Donald Trump because they were told he was not eating. He said, they're really worried Trump's not eating, so they asked me to come and see him. Donald Trump takes to Truth Social to say it's all wrong. Crazy Liz Cheney, he writes, who suffers from Trump derangement syndrome at a level rarely seen before, writes in her boring new book that Kevin McCarthy came to Mar-a-Lago after the rigged election because, yes, the former president was depressed and not eating. That statement is not true, he writes. I was not depressed. I was angry. And it was not that I was not eating. Donald Trump writes, it's that I was eating too much. Revelations from the fast food trail from Donald Trump. Somebody call the Chick-fil-A, McDonald's, Burger King and get something taken care of here. He says he was at Mar-a-Lago to get my support and bring the party together. Only good intentions. Eat up. Our business week starts now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Very happy Monday, everybody. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. It is Monday, December 4th, 2023. He's back.
I'm back. You're like, he's back. He's back. No, I missed you.
We missed you. We always do. It's just not the same. It's like I've lost an arm or two or a leg or something like that.
Well, you look like you have everything now,
yeah,
so that's what's important.
It's the Barbie pink.
Okay.
Sorry for all you on radio. Hey, listen, maybe what we've been seeing is a bit overdone in terms of the equity rally and the bond market rally.
I mean, is the Fed really going to cut 4 or 5 times next year?
Could be.
What would the economy have to look like in order for the Fed to do that?
Like I said, yes. Yes, Virginia, there is a Fed that may cut rates.
All right, well, the reason you're talking about this is because stocks and bonds are down today. It's kind of a chill market after 5 weeks of gains.
Chillax is the terminology we're using.
Okay, is that a technical term?
An analyst used it to describe the market, so I'm going with
it. All right, it is then.
Listen, it's going to be a big week for economic data points. A lot on the labor market culminating in that Friday monthly jobs report. So we'll see whether or not the markets, which market, last week's market, the post-Jay Powell market, or the meh market had it right. We're also going to get into more moves to really consolidate the airline industry. It's cyclical. You know, we grow it. Then all of a sudden everybody buys each other, and then it grows.
They spin the different things off, and things file for bankruptcy. But it's just the circle of life, right?
That's very nice. Could we do a little singing with that?
No, not going to happen. I don't have the rights to it, so I can't.
All right, Alaska Air's deal to buy Hawaii, and what you need to know about that. And then you get another big drug company gobbling up a smaller obesity drug maker. So I really thank God our reporter who's on it. I'm like, who else do we have to have on our radar?
Yeah, Madison Muller's going to be joining us a little bit later in our program. Plus, the world increasingly placing its bets when it comes to gambling. We're going to get insight on the business with the CEO of Flutter. It's the parent company of FanDuel. Peter Jackson's going to be joining us.
All of you in the control room, are you online gamblers? I don't know. There's 3 or 4 of you. No.
Ari is. He raised his hand.
Ari.
Oh, no. Ari's saying no, he didn't. He's not. Okay.
All right. 3 for 3. None of them are doing it. But nonetheless, it's a big business, so we're going to check in with him. RTO or WFH. We're going to ask Mark Dixon, founder, executive director, and CEO of the office-based provider IWG, returning to office, working from home. Which is it?
All right, and the Southern California startup fashioning itself as a new age defense tech and weapons maker, and its mini autonomous fighter jet. We're talking Anduril.
Yeah, everybody may be talking meta and AI and other stuff, but this is some really, really cool stuff. Also interesting is certainly the market trade. As we said, a little bit of a reversal from what we've seen. Over to our TV colleagues. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Scarlett Fu. We're joined right now by our colleagues Carol Massar and Tim Stenovic. A big welcome to all of our audiences across our Bloomberg platforms, television, radio, originals, and our partnership with YouTube. Happy Monday, Carol Massar. Happy Monday. Unless, of course, it is Monday, right?
It's Monday.
Oh, okay, just checking. I never know
like
with
a
Carol.
Monday.
You know, I mean, she's only here 3 days a week.
Stop
so maybe she's
that.
not
I
Wednesday.
am here a lot.
You, okay, that's
What?
true. I won't argue with that.
Okay.
Just not every day.
All right, so should we talk about the housing market? Because we've definitely seen the slowest housing market in a long, long, long time. And we're hearing from different players within the sector about the impact that that is having. And if you think about growth in the economy, we're worrying about maybe what kind of recession. Do we get a recession? Is it easy next year? But, you know, those plunging U.S. home sales are definitely having a ripple effect on consumer spending. Fewer Americans are moving into houses that need to be outfitted with furniture and appliances. We're just not buying that stuff, Tim.
Okay, so think about
Except
it.
for you.
Yeah, well, that's because we recently moved. So the average household spends about $8,000 more on home-related goods and improvements in the 2 years after buying a home, Romaine. That's according to a recent study from folks over at Northwestern's Kellogg School of Management. Yeah. But if people aren't moving, then they're not buying those new refrigerators. They're not buying those new couches. So you see companies that make these, you know, quote unquote durable goods actually filing for bankruptcy, reporting that they're going to have fiscal years that where revenue actually falls over the last year. It's not the entire economy, but it's an important part of the economy.
It's not the entire economy, but it is a big part of it.
Yeah.
And I do wonder whether this is kind of something we're going to have to live with for an extended period of time. Because even if rates do tick down a little bit, mortgage rates tick down a little bit, there's still a big affordability factor. And I can't remember exactly where the data came from, but there was a stat floating around last week about the percentage of Americans and the median income that you need to buy a home. And the idea that the majority of Americans fall well below that threshold.
I wonder to what extent there's going to be a little bit of pickup in buying things for separate dwelling units. What are those things called?
ADUs.
ADUs,
Yeah,
yes,
accessory
exactly.
dwelling units. Big in California right now.
They're in California, and it's picking up steam in other parts of the country because there's just no availability of homes. So at some point, you're going to maybe buy a smaller refrigerator. All right, what we're taking a look at,
Those
of course.
ADUs, we're just talking about what, like a garage apartment, like the farm?
No, I mean, what they essentially did was they changed single-family zoning in a lot of parts of California to allow people with yards to actually build other units to help solve the housing crisis. And, you know, people are building them, and they're
Like
still,
above
guess
your
what?
garage or something?
Yeah, above a garage or even a freestanding one, and they're still expensive.
And in the backyard so that someone can get their own house. Let's move on to M&A because it is M&A Monday. If you look at what's going on in the airline sector and in the pharma sector, Alaska Air buying Hawaiian Air for $1.9 billion in cash or debt. We were just talking about the big question mark is whether regulators allow this to go through.
I'm waiting for the regulators to weigh in to tell us whether or not they're going to allow it to go through. It's a good question, and you know, you have executives from Alaska and Hawaii saying, okay, well, this actually is good for consumers. But Carol, I'm wondering, you know, of course they're going to say it's good for consumers, but I'm wondering about some examples of consolidation in the past where ticket prices have actually gone down.
Yeah, I think it's kind of interesting. You're going to have to look at routes, whether or not there's a lot of overlap, and what it means in terms of, I mean, I know Hawaii is certainly facing a lot more competition with Southwest when it comes to flights to Hawaii, so they're going to have to look into what is the impact on consumers. Romaine, what I find interesting is that M&A globally still down about 21% year over year. It's down about 16% in North America, down 28% in
You're surprised
in
by
Europe.
that?
No. But I'm just saying it's dramatic.
It is dramatic. Well, you have the regulatory environment we talk about, but it's also the issue of affordability. I mean, who has the cash and the stock prices to really support a major acquisition like that? And then there's also the question of whether investors want that. We were talking on the television program about kind of the year of efficiency and a lot of the cost cutting. M&A doesn't necessarily play into that strategy for a lot of folks. And the idea is that, well, if you can sort of make it organically, that's what you need to do. I don't know. And then as far as Hawaiian goes, I don't know. This could be a little bit of an arbitrage, too. I mean, it's going to take a long time for this deal to even get approval. And I don't know, maybe you have different regulators by the time you get to that threshold.
Yeah, that's a really good point. Could it change and the regulatory environment kind of ease back a little bit? All right, well, we will certainly see. Hey, guys, that's a wrap. We're going to come back in less than an hour's time. We're going to count you down to the close on this Monday, our cross-platform on radio, TV, YouTube, and, of course, on Bloomberg Originals Beyond the Bell. We'll see you at 4 p.m. Wall Street time. All right, everybody, you are listening and watching Bloomberg Business Week on this Monday. Carol Massar along with Tim Stenovic live in our studio here at Bloomberg headquarters. Just watching the markets in a week that is going to be an interesting one. It is jam-packed full of economic data.
It's like all related to jobs, too.
It is. It's really important, but you do wonder, most expect that it's going to show that, yes, indeed, the jobs market is easing and softening and slowing down. So we'll see whether or not we get any kind of surprises, but it would certainly support what we've seen in terms of the data flow of growth softening, things are easing back in the U.S. economy.
All right, change in non-farm payrolls estimated to come in at 186,000. That's for the month of November. We're going to get that, Carol, at 8:30 a.m. on a Friday morning. Remember, last month was a downside surprise, 150K, and that helped set off the rally in the equity market and the bond market that we've seen over the last 5 weeks.
Bad news is good news kind of thing that the Fed is going to be done. All right, so reality check. It does feel like a little bit like reality check Monday. U.S. Treasury yields backing up a little again, especially at the shorter end. U.S. stocks, too, continuing to take a breather, although we're off our worst levels of the session. This is after both U.S. stocks and bonds rallied in November, so could that be it? And yet, as you'll soon hear, there's plenty of room left for a risk-on rally after November's stunner. That was certainly the tone on Friday after Fed Chair Jay Powell spoke and seemed to be setting up for that long-awaited Fed pivot. In our Monday Market Roundtable, with us is Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams here in our Bloomberg Interactive Broker Studio. I've got two sets of research from you.
Okay.
Let's talk about, though, a little bit more about November, because there is a report that you've got that says maybe there could be more.
Yeah. Well, it's really interesting because usually when you get such a powerful surge off of a low and off of a panic low, they have follow through. And I think that's the big takeaway from our report is the degree to which we saw a broadening recovery and a very strong recovery is usually good news, at least for the short term in stocks, and tends to ultimately result in more gains. Now, I think a lot of people are really concerned about the economic environment. Many people are concerned about the lack of breadth that we had in 2023, sort of dismissing the market gains. And frankly, those things are a good thing. The more skeptics we have out there, the more likely that the market continues to climb.
I love when all the market stars come out and like, we're a little nervous
Wait,
about
explain that, though. Why is
sure.
that?
This is why we run our Market Pulse Index, which is our index of market sentiment, because stocks tend to rally off of panic periods and they tend to peak off of manic periods, right? When everybody's optimistic, the last buyer's already in. When everybody's pessimistic, there are plenty of potential buyers and the last seller probably already sold. So that tends to work behaviorally and is actually probably your best potential timing mechanism as opposed to trying to time what's going to happen with economic
Gina,
data
now
or
you tell
earnings
me.
data.
Come on.
Sentiment does create a lot of these near-term swings. We saw that throughout this year, frankly. The Market Pulse Index has been a magnificent guide to tactically maneuvering through this equity market because
It's really been spot on, hasn't it?
Yeah, it's really helped us a lot because there's the economic environment, the earnings outlook environment is so opaque and so difficult to see through. And really difficult to read, particularly given all the moving parts. But sentiment can be something of a guide.
Let's talk about the economic environment. Bloomberg News senior editor Chris Anstey is also with us on Zoom in our Boston bureau. Chris, come on in on what the environment is and kind of the enthusiasm that we got off of Fed Chair Jay Powell on Friday. That kind of seemed like, all right, the pivot's here.
Yeah, I mean, I think, we have seen a shift in messaging from Federal Reserve policymakers over the past couple of weeks, and that's what the market is responding to. It seems like the narrative has shifted from higher for longer to restrictive for longer, and restrictive is a more nuanced take because it includes the possibility of rate cuts if inflation keeps going down. We had Powell saying that the Fed is now well into restrictive territory just a couple of days after the New York Fed President John Williams was pointing out that there's one estimate that says that their rate setting right now is the tightest it's been in 25 years. This is because inflation has been coming down. And so the enthusiasm is about the ability then to cut interest rates at some point in the new year because you have a still restrictive setting.
Well, and one thing I want to go back to Gina is then, okay, so Chris says we've moved from rather than higher for longer, restrictive for longer, which then goes to another research report that you did today about the duration of a recession historically matters more than its depth for the path of equities. And I want to play off of Chris there, because if it's restricted for longer, I wonder if that increases the chance of what kind of recession we get.
Yeah, I think it's a really, really good point, because so far it seems that interest rates are playing such a minimal role in driving economic activity that maybe we're entering into a period where suddenly we feel the impact of interest rates. I mean, our work really clearly showed that 2022, we had a really tough point in time in the earnings stream, which would suggest that the economy was significantly weaker in 2022 than many believed. And that certainly wasn't an immediate reaction to higher interest rates. It was a reaction to inflation. And then the deceleration in inflation created some sort of near-term reprieve for the equity market in 2023, albeit modest reprieve, and certainly not every stock participated in that recovery process. If we're heading into another dip in 2024, presumably perpetuated by higher interest rates, which seems to be what every economist on the street is anticipating, higher interest rates finally have some sort of decelerating impact on economic growth, if not recessionary impact on economic growth, I think it becomes really important to consider, what does that mean for earnings? Because earnings drive stock prices. The Fed doesn't drive stock prices. Interest rates might drive valuations, but that relationship is really hazy. Valuations are already suppressed outside of the Magnificent Seven. You know, you were looking at a Russell 2000 that's trading 2 standard deviations below long-term median versus large caps. We're looking at ex-Mag 7 still trading at very low levels relative to their long-term history. So lower interest rates could be very stimulative to valuations. But what will it really mean for the earnings outlook if we get those lower interest rates going forward? Will it be too late? Will we be in another dip in earnings or not? It's a huge question for investors.
And Chris, I also wonder what it means for the inflation picture. Let's say the Fed is able to successfully bring inflation down to 2%, and as a result, the Fed is able to cut. Well, we've seen this movie play out before, a generation ago under Paul Volcker, and the concern, of course, is that inflation comes back. So does that mean that the Fed doesn't cut when inflation goes back to 2% to make sure that it stays at 2%?
If we're at 2% on the core inflation gauge, it's hard to believe the Fed wouldn't be cutting, just given how high the level is today. 5.5 on the upper bound. But to one of Gina's earlier points, I was talking with an economist earlier today who made the point that economists as a community, everybody knows this phrase, monetary policy works with long and variable lags, but from week to week, month to month, people forget that happens, and by 2024 we will be, will soon be 2 years from when the Fed began hiking. So you can imagine that the bite is going to have a bigger impact as time goes on, and you get more and more debt rolling over into higher cost brackets. This is going to we're going to see the long and variable lags, really hit home before too long.
Not apples to apples, but I think about Spotify cutting. Now, mind you, some of it's what, their own business story, if you will, but I do think about that, Gina, that if all of a sudden companies are squeezed, is that when we start to see kind of major job cuts in order to maybe preserve some of their business fundamentals?
I think there's something to that. I mean, so far we're not seeing it. Frankly, I think that companies already cut for the most part. We saw financials, we saw technology, we saw communication services viciously cut their labor force in late 2022, early 2023. So we already went through one major spike in layoffs and one major round of job cuts, and that is the result. The result of that is the continuing claims increases that we're seeing today. What we see in the company earnings transcripts is no evidence that another round is coming yet. So I'd like to know if we're going to get another round coming, because that to me is a very big case for the Fed to start to reverse policy. To me, just inflation coming down is not enough for the Fed to say it's too restrictive. It's too restrictive if growth starts to show some real damage, and growth, the only aspect of growth that hasn't already been damaged is the employment market. So to me, it seems very clear that the Fed needs to see the unemployment rate rise to get that reversal in policy. And that's the true risk, is will we actually see it? And are we counting on it? Because the companies themselves are not telling us that they're going to lay off people en masse yet.
Chris, 10 seconds. Are we going to start seeing that unemployment rate tick higher real quickly?
We're seeing, increasing calls for a 4% rate, if not for November, for December. So the turn may be coming.
All right, guys, thank you so much. Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams and Bloomberg News Senior Editor Chris Ansey. Thank you, guys. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Back to work Monday, and we are looking at losses for the Dow, the S&P, and the NASDAQ Composite Index. Right now, the S&P is down 32 points. That is a drop of 0.7%. Dow Jones Industrial Average lower by 59, drop there of about 0.2%, while the NASDAQ Composite Index now down 159 points, a decline of 1.1%. 10-year yield 4.28% with a 2-year at 4.6%. 0.64%. Gold now down $41 the ounce at 2,030. That is a drop of 2%. Bitcoin at 41,822. Bitcoin is surging 5.3%. Earlier today, it was trading above 42,000. West Texas Intermediate crude oil down 1.1%, 73.25 for a barrel of WTI. Well, as for the market backdrop next year, Dana Dioria is Co-Chief Investment Officer at Investnet.
I do think that, the market has a decent chance of slowing down next year. Does it mean it's a massive crash? No, not necessarily, but I don't, advocate kind of chasing after stocks and not being balanced in the way that you go to the market.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Hawaiian Airlines shares are surging after the airline agreed to be acquired by Alaska Air Group for $1.9 billion in cash and debt in the latest attempt to consolidate the U.S. aviation industry. We got a whole lot more on that deal coming up in just a moment with our George Ferguson. But right now, we're looking at Alaska Airlines shares down 14.8%, but Hawaiian soaring by 193%. Again, recapping, stocks lower, S&P down 32 now, just about a drop of 0.7%, 10-year yield 4.28%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie all over this. Everybody at Bloomberg News has been all over this. We're talking about the airlines. If you pull up the S&P Super Composite Airlines Index, by the way, it's a cap-weighted index. It's up about 1% year to date, which is kind of boring, Tim.
Yeah,
and it feel like
I agree.
Doesn't it feel like it kind of masks some of the underlying activity that we've been seeing in the sector? I feel like there's been a lot of stuff
I think it does, but it speaks to the size of the deal relative to how big the airline industry is, right? So over the weekend, we got the headline that Alaska Air Group agreed to buy rival Hawaiian Holdings for $1.9 billion in cash and debt. That's roughly $18 a share. It's a significant premium to Hawaii's $4.86 closing price, Carol, on Friday.
Yeah, talk about a pop. All right, so let's get into it, because one of the things on our mind, and certainly on investors' mind, is whether or not that deal will ultimately get regulatory approval. We've definitely seen a Biden administration that's been pretty aggressive when it comes to pushing back or stopping M&A activity. With more on the deal and the industry, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson is back with us on Zoom in New Jersey. George, good to have you here with Tim and me. Alaska and Hawaii, both out west. Routes don't seem to overlap. It seems kind of
It's like a teeny bit, right? There's a teeny bit.
Why or why not does this combination make sense in your view?
Yeah, so I'm actually not sure from an Alaska perspective what it really does for the airline. From a Hawaiian perspective, it does a lot, and I think you see that obviously in the stock prices today. From the Alaska perspective, which is probably more interesting for the future of the U.S. airline business, it adds connectivity inter-island in Hawaii. It adds long haul, right? They've got wide body airplanes at Hawaii, and they fly into Japan, Korea, Australia, some other Pacific, nations, but everything very focused on Hawaii. So, when I think about Alaska and I think about what Alaska wants to be when it grows up, right? It's largely this West Coast airline with some good, transcontinental routes. And it really needs to build out the rest of its U.S. network. And then I think, and then potentially the next step would be international. It's use these joint ventures or, with American to
your point. George, to your point, it's like when I think of Alaska Airlines, I think of the people who fly Alaska Airlines, my friends who have Alaska credit cards are the ones who live in Seattle and Portland. And nobody else, because so how can they, widen their breadth at least to serve the U.S. customer more?
Yeah, I think short of an acquisition, right? It would be hard for Alaska to really build, a bigger footprint across the country. Taking deliveries, you can continue to roll out your network across the U.S. It's going to take a long time to do it. And this transaction, it gives them better access to Hawaii, and it makes their business a lot more complex, because now they've got to manage long haul inside that business, something they haven't traditionally done. Folks have tried sort of budget long haul. It's a rough road to hoe, I guess if you say it in farming. Even very good low-cost carriers like Ryanair shun that idea of low-cost long haul. So I'm really not sure what this got there, but it did, from a transactional standpoint. If you're Alaska, maybe you went, look, we get this at a nice price, and we can help Hawaiian through a very difficult time here with our strong balance sheet. And that's kind of what I saw here.
Well, to be fair, like every once in a while I do a search and I think I'm going out west or something and I get something for Alaska Airlines.
You did. We were set to fly on a 737 MAX Alaska to San Francisco last year, and the flight was canceled.
Right.
So we flew on American instead.
What is Alaska Airlines? Can you help me out? Like, is it a carrier that I want to fly? Like, who are they?
So, I mean, I've flown the product. I think it's a strong product. I think it's, they've got a nice company, good corporate culture is my sense. When I fly on the planes, they're comfortable. The staff treat you well. So I think it's a really good product. But I think you mentioned it earlier in our discussion, right? If you're in Portland and you're in Seattle, I think it's sort of hip to have to be an Alaska frequent flyer. But it's largely, I think, a leisure West Coast airline.
Interesting,
right? If you're flying for business and you need to get international out of Seattle, you're probably going to be flying in Delta, or you're going to do the Alaska thing and work through American to fly into it.
Yeah, that's a good
not going to take you across the Pacific.
Hey, I want to talk a little bit about Hawaiian's challenges, because I was shocked to see how low of a price this was for Hawaiian. I mean, they've got 52 planes, George. They've got some pretty good market share in one area. I guess that the challenge that they've had is the Asia side of the business and flying passengers to and from Hawaii from Asia post-pandemic. It just hasn't done very well. But this is relatively speaking, this is a tiny airline.
It is. I mean, it's got 60 airplanes. Alaska has 200 plus airplanes, right? So that just gives you a quick sense of the size of this airline. Really a very niche carrier built around Hawaii. And, it has actually a number of problems right now, that a lot of which I think are temporary and not all they're doing, which I think is a positive. But also that there's more competition in the islands now, which makes me wonder if we're ever going to get back to the profitability that Hawaiian saw pre-pandemic. So I would say, the headwinds are the yen is pretty weak right now. They're bringing a lot of travelers from Asia, especially Japan. A weak yen makes that a lot more difficult. Asia's still sort of waking up and beginning their travel, recovery. They're not as far along as U.S., Europe, domestic, and transatlantic. They had the wildfires. I think people look at the wildfires and say maybe it's not the right time to go to Hawaii. Understandable. And then Hawaiian has a bunch of airplanes in the fleet that have geared turbofan engines. This engine that needs to come off wing, it's a Pratt & Whitney Raytheon engine, has to come off wing for an inspection. So there's going to be a number of those airplanes down, and so that capacity takeout hurts. They'll get reimbursed by Raytheon, but I guess it's a function of their negotiations there. So a bunch of headwinds I think here that are temporary, but that's in front of a very big debt payoff on the very beginning of 2026. They have $1.2 billion due.
That's a lot. Hey, so regulatory-wise, though, do you think this ultimately gets done? And if so, does it just take a long time to get it done?
I do. When I look at it, I just don't see what the big hangup is now, what could be. Now, look, the Biden administration has been very, I think, aggressive on mergers, airline mergers. They don't seem to like, right now they're in the middle of the JetBlue Save trial. But when you look at this, really, the overlap is the big Key West gateway cities. It's Portland, it's Seattle, it's San Francisco. It's LAX, LA. And so, Southwest has moved into this market as well, right? So there's more competition in this market, which you could argue is a good thing. But those gateway cities, maybe there might need be some divestiture of routes or something like that. But that's really the overlap. There's not a lot of overlap after those gateway cities.
George, it sounds like you might need to do a research trip to Hawaii just to check out the Hawaiian product. Maybe you know what you should do? Probably you should do one pre-acquisition close.
George,
and then
meet your
post
manager,
also.
Tim Stenovic.
I just think you just need to, be able to experience the product. You need a little aloha.
Agreed.
Okay,
Agreed.
cool. I'll come with you. It'll be fun.
Oh, there it is.
It'll be
There it
fun.
is.
Sounds good.
Yeah.
We're going to learn a lot.
Yeah, that sounds good.
Yeah, a little Mai Tai, a little, yeah, you'll learn a
Can we
lot.
check out the Pratt & Whitney engine?
Over
Yeah,
cocktails.
get a window seat. Yeah, that's fine.
Over drink with some umbrellas or whatever. Listen, thank you so much. We always appreciate it. That is, of course, our George Ferguson, Senior Aerospace, Defense, and Airlines Analyst at Bloomberg Intelligence.
Can you imagine if I got to sit next to George on a, here to LAX
He would be
and then
like,
LAX to Hawaii?
excuse me, could I have my seat moved?
Yeah, he's like, I talk planes all day at work. I don't want to talk planes right now.
Tim would be like, okay. But wait, can I ask you about... All right, everybody. Let's head off to D.C. Nancy Lyons knows a lot about Alaskan Airlines. She, right now, though, is going to talk some world and national news. Hey, Nance.
All right, thanks, Carol. The Biden administration is warning Congress money is desperately needed to fund the war in Ukraine by the end of this year. The warning came in a letter first from Budget Director Shalanda Young, who says if the money is not provided, then it would, quote, kneecap Ukraine on the battlefield. National Security Advisor Jake Sullivan says it is a stark choice.
When we run out of money to buy weapons to replace the weapons we're giving, and this is the point of Director Young's letter, we are not in a position to continue to supply weapons to Ukraine.
Sullivan says Congress needs to decide whether to continue supporting the fight for freedom in Ukraine or let Russia prevail. The COP28 summit is putting the focus on greenhouse gas emissions, and the U.S. Special Envoy for Climate Change, John Kerry, says satellite surveillance is now making it easier to track polluters. He issued a warning to the biggest polluters, saying, quote, you can run, but you cannot hide. He says they all need to be prepared to name and shame. Doug Burgum is ending his presidential bid. When the Republican governor of North Dakota announced his candidacy back in June, he wanted to focus on Middle America.
Small town values are at the core of America. And frankly, big cities could use more ideas and more values from small towns right now.
The wealthy software entrepreneur participated in the first two debates, but failed to meet the criteria for the last one and also for the one that's set for this Wednesday in Tuscaloosa, Alabama. The deadline for Medicare open enrollment is this Thursday, December 7th. The Medicare hotline is open 24/7, or you can go to medicare.org. The general enrollment period for original Medicare is January 1st through March 31st each year. You can apply during this time if you missed your first-time enrollment window. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We got 20 minutes to go ahead of the closing bell after an up week last week. Wall Street kicking off this week with losses. The Dow, the S&P, NASDAQ 100 index all in the red. Russell 2000, though, is trading higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon. Charlotte main U.S. averages off those lows, but still in the red. Dow is currently down 63 points. S&P's dropped 29, and NASDAQ is lower by 0.9%. The U.S. 10-year yield at 4.28%. Gold is down 1.9%. Oil trading in the red, and Bitcoin is surging by 5.5%, topping 41,000. Among the main 11 S&P sectors, leaders were real estate and consumer staples. Tech and telecom were under pressure, and leaders to the upside in the Dow, 3M and Merck, while Intel fell 4% and led to the downside. In deal news, Five9 is set to weigh a sale, and in other news, Alaska Air plunged as much as 19% after agreeing to buy Hawaiian Holdings. Wrapping things up, Starbucks fell for an 11th day. That's the longest losing streak since its 1992 IPO. Live from the first breaking news desk on Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes left in today's trading session, getting ready to wrap up the Monday trade. And our next guest is looking ahead to the new year and finds that the most important theme for next year is the shift from interest rates being the problem to a tailwind. So let's ask him exactly what he means.
Yeah, very pleased to have him with us. Jimmy Lee is founder and CEO at the Registered Investment Advisor Wealth Consulting Group. Based in Las Vegas, but he's here in our Bloomberg Interactive Brokers studio right now. How are you?
Great. Thanks for having me. Good to see y'all.
Welcome to. Are you here to see the Christmas tree?
Always come in December to see the Christmas tree, but we're
Seriously?
actually here. Yeah, we are here for a little bit of a firm meeting and personal reasons.
I bet the Christmas tree that they put on the Sphere looks really cool these days. I bet they would make a cool Christmas tree.
We're dying to see the Sphere. Have you been to the Sphere?
I haven't been to an event there, but I could see it from my backyard.
Seriously?
So, yes.
What do you think? Pretty cool?
It's a pretty cool thing, but they put some interesting stuff on there, right? So
Yeah.
I was actually at the F1 event for one night, and they had some, it was right next to it, so it was really neat.
November. First let's talk about what happened in November. Stock rallying, broadening out, that was a good sign.
Yes.
But you're thinking about next year, and you're thinking about the shift from the concern on interest rates to some kind of tailwind. What tailwind in particular?
Well, this year I've personally been a little bit of a contrarian, and so is our firm, in the sense that we didn't think that we were going to see a recession. The consumer was going to remain strong and spending enough, which has proven to be the case, and that we could have a nice market in terms of equity prices going up, which is what we've seen so far, right? So I think that has played out. And I thought that maybe inflation would come down a little sooner than what we've seen in reality. But I think if there's going to be any surprises to inflation, maybe it'll be to the downside, not to the upside. So I'm not in the higher for longer camp. So I'm a little bit more in the consensus now that maybe the Fed moves sooner than what they're saying they're going to do. And that's really what's been helping to push the market higher. So the 3 months prior to November, we lost, 8% plus in the markets. In November, what was really interesting was it was a broad-based rally. So, the S&P 500, Russell 2000, the equal-weighted S&P 500 all did about the same, including the Dow. And the NASDAQ 100 and the NASDAQ and the Magnificent 7 just did a little bit better. So I think we're seeing a little bit of that, closure of the gap between the 7 stocks that really led.
Which is a great technical sign.
It really is, and I think our base case has been no recession. So if we don't go into recession, and somehow we get this super soft landing that Powell's been trying to orchestrate. If that does actually materialize, then I think cyclical starts to do better again. And I think you see rotation into some of those sectors that have been lagging, like small cap, mid cap, even international.
What's the equity market pricing in right now in terms of rates? Because it feels like, this equity market has gotten ahead of itself in the sense of, okay, rates are still high. But yes, it's looking forward. It's looking for the Fed to cut. But what is going to prompt the Fed to cut? And if and when the Fed does cut, does the market then move higher, or is that already priced in?
So I think that the market is predicting that the Fed may cut sooner than what they are saying right now. But I think what would need to happen
maybe
for that
sooner and more,
right? It would be better inflation data. That would, and also softer economic activity, but not too slow, right? So I think a combination of those things. And hopefully what will happen for stocks is companies continue to perform well and their earnings are good. And so all of those things maybe potentially happening could lead us into, I think, even a little bit more of a return before end of the year this year in a Santa Claus rally, and then maybe a few points higher back and forth. But I think the market's going to price a lot of that in. So in my opinion, by the time we get to our first cut, most of the returns are probably going to be baked in for interest-sensitive type stocks like tech, real estate, other sectors. And then I think after that, you'll start to see a rotation in a wider gap between the tech stocks and the other parts of the market.
So buy what now?
Between March and May, probably. I mean, that's kind of what the futures market's predicting in terms of cuts.
But buy what? What
Excuse
specifically? But buy what then?
You mean like what time frame?
Sectors? No. Sectors or specific names.
Right. I think tech's got more room to run.
Sorry, BUY versus BY.
Yes. So I think tech has more room to run in sectors that'll benefit from rates starting to come down. But I think a lot of those prices will get baked in before the actual first cut.
Yeah.
And maybe you get a little bit of a rally when we get that first cut, but I think it'll be priced in. And then after that, I think you'll see more of a rotation out of that and into more of a difference into like small caps, value stocks, cyclicals.
So help me out though, because tech is a lot of stuff.
Sure.
So are you talking about the Magnificent Seven, or, I mean, they're not all pure play, maybe tech, but what kind of tech are you thinking that's kind of interesting right now?
I would say those 7 stocks for sure, but
Okay.
high-priced stocks that are in the tech area. And, while, again, I think we have another rally for those stocks, potentially because of rates continuing to hopefully pause and maybe go down. But by the time that happens, I think it'll be baked in. And as we've seen in the past with those companies, when there's a bad report or a bad quarter, they get hurt pretty badly potentially. So I think investors need to be aware that if you're beating the market this year, you have to be super concentrated. So most investors should be lagging the indexes, right, this year. And I think buyers and investors need to be aware that when you're buying the S&P 500, you're very concentrated, and 30% of your money could be in 7 names.
That's been the story for years in the S&P 500.
Does everybody continue to say, don't buy it?
Yeah, and if it's not NVIDIA, it's Apple and Tesla and Microsoft and Google. Does that matter?
I think
if
money.
Slightly?
There's so much money going into index products through funds and ETFs that as long as there's money going in the market, those companies are going to get bid.
Because on the account of that they comprise so much of these indexes.
Absolutely.
Because their market cap
but
rated.
I think there are...
It's also where a lot of growth is.
Absolutely. But I think that there are institutional investors and big investors that are starting to want to be more diversified than just in those sectors and in those stocks. And I think we're starting to see a little bit of that. And I think a theme that may play out starting maybe, sometime next year, earlier on in the next year, might be this rotation from that to other areas. And maybe finally the people that have been, international investors, I think will potentially have a chance to make some money relative to the U.S.
Just buy international an index fund?
I mean, nobody really wants emerging markets these days, right? So I think emerging markets might even get a little bit of a bid.
Yeah.
But yes, developed international stocks, and I think the idea of the dollar, has peaked and maybe going down further could help with that.
Really quickly, this is going to feel random. Your big company's based in Vegas. What's your take on gambling stocks? Flutter, Penn Entertainment, DraftKings. Do you have any thought, being in the midst of it?
Not necessarily specifically on those names.
We have the Flutter CEO coming up, so I'm curious what you think.
Not specifically on those names, but I think that, gaming stocks is very dependent on how healthy the consumer is. And fortunately, there's still a lot of money. A lot of people that gamble, mass affluent and wealthier, have a lot of money sitting on the sidelines. I mean, I don't know the latest data, $6 trillion almost just sitting in money market funds.
Yeah.
That could also start chasing the markets too.
We got to run. Jimmy Lee, happy holidays. Founder and CEO at Wealth Consulting Group. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got Meta Platform shares now lower by 1.3%. Mark Zuckerberg is selling Meta stock for the first time in 2 years after the social media giant rapidly rebounded from a tumultuous 2022. And with more on the stock sale, here's Bloomberg's Steve Rappaport.
Charlie, the Meta co-founder's trust, as well as entities for his charitable and political giving, unloaded about 682,000 shares in November. They were worth almost $185 million at the time, according to data compiled by Bloomberg from regulatory filings. That's the first time entities that manage Zuckerberg's fortune have sold shares since November 2021. Meta surged 172% this year through the end of November, outperforming all major U.S. tech companies other than Nvidia Corp. Zuckerberg has regularly offloaded blocks of Meta stock over the past decade, but didn't sell a single share in 2022. Charlie?
And that's Steve Rappaport reporting. We've got Meta shares again lower now by 1.3%. In the airline industry, Hawaiian Holdings is surging after after the airline agreed to be acquired by Alaska Air Group over the weekend for $1.9 billion in cash and debt in the latest attempt to consolidate the American aviation industry. Right now, we have got Alaska Airlines shares. They are trading lower. ALK on the ticker down now by 14.5%. Hawaiian, completely different story. That stock is soaring right now at up 192%. Those are some of the top company stories that we're following, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
Bloomberg Business Week is brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master along with Tim Stenovec. We're going to head over to our TV colleagues in just a moment to wrap up this trading day on this Monday. In the meantime, just looking at some of the stories that have definitely caught our attention on this Monday. It's kind of an interesting day, a little bit of a, I almost feel like a little bit of a quiet day, even though there's some specific kind of
there's some nice company stories,
Yeah. Having said that, I am a little bit obsessed with this, and I thought about getting either our June Grosso or somebody from our legal team on as well. U.S. Supreme Court signaling a likely divide over Purdue Pharma's $6 billion opioid settlement as the justices weighed President Biden and his administration's contentions that the accord improperly shields the Sackler family members who own the company. So what happens is you have a company, right? And they get into problems and they do a settlement and so on and so forth. Well, a lot of times when this happens to a company—
These were big problems.
Right. Yeah,
Purdue.
Huge problems. And, you know, an awareness of what was not good about these medications, continuing to push subscriptions and so on, prescriptions, if you will. But a company gets into trouble and then they file bankruptcy that, first of all, shields individuals from being pursued legally, and it kind of lets the company wrap it up, tie a settlement, and then move on.
Yeah, in a Monday argument that cut across the court's normal ideological divide, some justices questioned whether the Sacklers should get the benefit of legal shield when they haven't filed for bankruptcy themselves.
It's a really good question. Justice Elena Kagan asking, why should they get the discharge that usually goes to a bankrupt person once they've put all their assets on the table without having put all their assets on the table? You know, a lot of money was made, and the family made a lot of money.
And the flip side of this, at least on the Supreme Court, is justice such as Brett Kavanaugh, who said, quote, bankruptcy courts for 30 years have been approving plans like this, so drawing on precedent there.
Yeah, this is, you know, all of the corporate world is watching this because this kind of an outcome could change things very, very significantly going forward.
I think fair to say they've lost in the court of public opinion.
Yeah, absolutely. I don't know.
With the way the donations have come off the walls at art museums.
I'm a big believer in accountability.
Yeah.
Just the way it goes, but that's just me. Let's see what the Supreme Court does. Anyway, we'll continue to track it. Time to head to our TV colleagues. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting it down to the closing bell. And here to take us beyond the bell. It's a global simulcast. We're joined once again by Tim Stenovec and his sidekick, Carol Master. Welcome to our audiences across our Bloomberg platforms, television, radio, as well as those folks streaming us on YouTube.
Sidekick. I'm honored to be his sidekick. What do you want? You know, it's kind of an interesting day, right? A little bit of a break from some of the enthusiasm that we've seen. Although I'm looking at equities, I'm looking at the S&P maybe at its best levels of the day. Having said that, did you guys see what's going on with Bitcoin?
Yes.
Yeah, on fire.
Unbelievable, hitting 42,000, right? The last time we saw that was what, April of 2022, I think? And it's up about 152% year to date. I mean, crypto, still not, you know, Bitcoin specifically at its highs that we've seen, but definitely quite a bounce back.
There's kind of some weird mixed signals happening here. Like there's the euphoria of crypto with Bitcoin hitting a high that it hasn't seen in months, Scarlett. There's also gold moving, you know, higher and also lower on the day today.
Safe havens, both of them, safe havens.
But it's kind of strange given the way that people are talking about, okay, the relative strength of the economy, what we've seen in the equity market over the last 5 weeks. and what they expect the Fed to do early next year.
And then you've got the Russell 2000 continuing its outperformance. I'm just looking at volume, and yes, volume is higher for the big caps, but it's much, much higher for the Russell 2000, 28% above the 20-day average. Volume in the NASDAQ 100, for instance, about 50% above the 20-day average, but it's to the downside.
Yeah, and in which point out, this is 4 straight days where we've had outperformance of the Russell versus the broader markets. And I was taking a look at the differential between that and the NASDAQ 100 here. 1, 2, 3, 4, 5. This is something like the 6th best outperformance of the year. I'll double check that number here, but this is a meaningful outperformance, not just something willy-nilly here. You take a look at the numbers on your screen, red across the 3 biggest averages here in the U.S. with the Dow down 0.1%, the S&P down 0.5%, and the NASDAQ composite down 0.8%. But you switch that camera around and take a look at the Russell 2000, 19 points higher. That's about 1% here on the day. We saw similar moves on the S&P 400 mid-caps and a slightly smaller move, but still to the upside on Dow Transport.
All right, since we're spending so much time on the Russell, so let's go there. You've got 1,416 names in the Russell 2000 higher today, 511 to the downside, 40 unchanged. So you do see increasingly scarlet investors.
Did you count those individually by yourself?
I did. Fingers and toes, fingers and toes.
She uses the Bloomberg to great effect. All right, let's take a look at the sector performances. You mentioned the Dow Transports remain. You can see transportation stocks at the top of the pile. They're gaining 0.7%. The exception there is Alaska Air, Real Estate Investment Trust, and Consumer Durable and Apparel also gaining about 0.5%. On the downside, that's where you got the big tech names. Chip companies, media and entertainment, that's Netflix, that's Alphabet, and software and services all down by at least 1.33%.
All right, guys, individual gainers. Speaking of the Russell 2000, the top gainer in the Russell 2000 is Hawaiian Holdings. Shares soaring up 192%. We all know the story. Alaska Air agreeing to buy the company, $1.9 billion. It's a cash and debt deal, and there is some investor concern about regulatory hurdles. We just talked with our George Ferguson, though. He doesn't necessarily see it, so we'll see ultimately if this deal gets done. Got to mention Spotify up about 7.5%, finishing off its best levels of the session, but nothing like job cuts to get a stock soaring. Looking to cut about 1,500 jobs. That works out to about 17% of the company's workforce. It's the company's steepest cuts yet this year. They're looking to cut back on their costs and also drive some profitability. So again, Spotify an outperformer up 7.5%. Beyond, it is the newly renamed Bed Bath & Beyond.
Yeah, this is very confusing. Because when I saw the ticker last week, and I thought it was Beyond Meat.
I did too.
And then I forgot that Overstock
we were talking about,
rebranded it.
Throwing some plant-based stuff on the barbecue.
Maybe they should combine.
Maybe. Yeah, get some towels and get some meat. There you go. Beyond, you might remember, meat, I don't even know. I know.
It's plant-based.
All right, it's plant-based stuff. It was late October that they officially changed the company name to Beyond. November 6th, remember, CEO was stepping down at the request of the board. That's never great. And then November 29th, headlines about the new board co-chairs and how company leadership mandated an intense restructuring, and it had begun taking decisive actions to do so. Nonetheless, this company, they announced record sales performance for the Cyber 5 holiday period, details of a restructuring plan. Stock is up for its 7th straight day. It has gained nearly 40% since November 22nd, so quite an outperformer. This one, too, it's a small cap biotech. There's lots going on in biotech, continues to be so. EyePoint Pharmaceuticals more than doubling in today's session. Check it out, everybody. Up 177%, jumping the most in about 19 years. Heavy volume, saying its mid-stage trial of its investigative therapy for eye diseases met all primary and secondary endpoints. Cantor calls the data a home run. And honorable mention, I don't know if we're going to bring it up, but Uber Technologies up. It's going to be added to the S&P 500 on December 18th. So,
wow. A lot of gainers on a day.
A lot of stuff to choose from.
We saw a lot of red on the major indices. No, I only have 3.
4 and an honorable mention.
I'm not what you call an overachiever, okay? Let's go to the decliners. I do want to start with Alaska Airlines Group. It's the worst performer on a percentage basis in the S&P 500, closing down on more than 14%. We know the news today. Alaska agreed to buy Hawaii Holdings for $1.9 billion in cash and debt. As Carol mentioned, we did get to speak to George Ferguson over at Bloomberg Intelligence a little earlier. He's kind of a head scratcher in terms of what Alaska gets, although he did add that it gets some connectivity inter-island when it buys the rival. And then also it increases Alaska's international routes with connections to Asia. But at the same time, it also gets challenges that Hawaiian Airlines has faced. Engines of some of the planes have to be removed for servicing, which takes the planes out of rotation, and more. Also wanted to get to shares of NVIDIA, among the worst performers on a points basis in the S&P 500 today, down 2.7%. Not a ton of news. I mean, the stock is up more than 200% so far this year. But we did learn that NVIDIA executives and directors sold or filed paperwork showing that they intend to sell about $180 million worth of stock. If all the shares were sold, Romain, it would be the biggest monthly disposal by dollar value this is in 6 years, this according to the Washington service. And then finally, just an honorable mention for Starbucks, shares down for an 11th day in a row here. Ooh. Look at this, 1.6% as a decline. Longest losing streak since the 1992 IPO. So it's fallen 9%.
So I looked into this because I saw last week, I was looking at that streak, and there was no news, but it does appear to be some analysts have come out and said they have some concerns about a slowdown in growth.
Yeah, cooling sales is what I saw.
Cooling sales, and they mentioned like alternative data. So who knows whether it's real or not, but certainly investors are kind of bailing on it.
It's a momentum trade at this point.
Yeah. Interesting too, kind of investors, at least for one day, bailing on that Treasury rally where we saw prices actually move higher, which pushed yields down pretty significantly over the past couple of weeks. That's put on pause here for this day in a pretty big way. A significant sell-off that we saw today that pushed yields higher on the 2-year yield, up by about 9 basis points, and a similar move on the 5-year. On the longer end of the curve, not so dramatic, but it really is kind of the setup heading into this week, a week where we're going to get a lot of economic data that may potentially ratify a lot of these bets on rate cuts heading into 2024, or maybe it throws cold water on those rate cut bets.
Maybe people are closing out the positions to bid up Bitcoin. Who knows? Pushing it above 40,000, 41,000, 42,000. Not sure where it goes next from here, but it definitely, there's a FOMO, stain on it.
I thought what was interesting is Mike McKee, I think, was on with maybe you guys on television earlier, and just talking about specifically how we're finally going to start getting November data, right? So it's a little bit more relevant to this quarter, certainly, and trying to give us an idea of just maybe some forward-looking trends, if you will. But all of this jobs data, it'll be interesting to see what jolts. I think he said it was still going to be up near that 9 million mark, so still kind of showing some strength. But whether or not what we get on Friday ultimately shows that we continue to see some softness in the labor market and some softening data, not necessarily falling off a cliff.
You guys are speaking to Katie Kaminsky a little later on the program, right?
Yes.
Will you do me a favor and ask her if she's sticking to that 6% call in the 10-year? She was early to that, on our program months ago, and we hit 5%. But a lot of analysts are saying, okay, well, we kind of hit peak rates at least on the 10-year.
Yeah, it seems to be the narrative, but I guess it gets to this idea, and I'm glad you bring up the November data. I mean, or at least Mike McKee brought it up, because it gets to this idea too that when everyone saw that momentum coming out of the third quarter into September, there was this idea that, okay, you have to have a drop off in November. So I guess the question is, are we going to start to see that in some of the data that we got this week? Or if it does show resiliency here, does that then add fuel to this fire that, maybe that soft landing is in the cards? We spoke with Chris. I know you keep tabs, Tim, on all of our guests, but we spoke with Chris Ailman just a little while ago. He's kind of in the soft landing camp right now as well.
But there's also the alternative of that, which is if we do see strength and resiliency, does it mean that the Fed has more work to do to actually bring the economy to a place where it does cool down?
I feel like the Fed is kicking up its heels right now and basically saying, hey, the market's doing all our work for us. But maybe it gets back to the idea, too, and I know we're going to have this conversation ad nauseum next year about the transitory nature of some of the inflationary pressures and whether they truly were transitory this whole time and whether what the Fed actually did had any real material impact in bringing that down.
I also do wonder as things come down, right? They always say it's much more difficult, right, when you're in terms of those last few stages of getting inflation down. But I also do wonder when things start to kind of come undone, how quickly it starts to come undone and kind of plummet with it, whether it's economic growth or so on. So I guess I still feel like we're coming out of the pandemic. We don't quite know. I mean, could it possibly be that we get this very soft landing?
Out of the pandemic?
Well, there's a lot of one-offs.
But I still feel like there's still a lot of money sloshing around in terms of infrastructure spending and some of the bills that came out of Congress. So I just do wonder, I don't know.
I was looking at the Atlanta Fed GDP now. It's now forecasting 1.186%. That was from, what, a 5 handle in the third quarter?
So, we'll get those economic projections.
But what was it at the start of the year? It was like negative, right? I mean, everyone's like, 2% growth for the U.S. economy. That's good, right?
It's better than
It's just that dramatic
down
slowdown
2%.
you're talking about.
Yeah, exactly. I mean, I know people want to parse every little thing, but anything else, Carol?
This
I think we have to go.
This sidekick has to go. All right, we will see you tomorrow. That'll do for our cross-platform coverage. Radio
Are you
TV
both going to be here tomorrow?
Yeah, we'll both be here. Don't worry. We'll be here.
Oh, man. Radio, TV, YouTube, Bloomberg Originals, Beyond the Bell. Folks, we will see you tomorrow.
All right, it is a Bloomberg Business Week. Tim Stedevec and Carol Massar live in the Bloomberg Interactive Broker Studio. Big thanks to our TV team. Always fun to wrap things up with them.
I love it.
Hey, sports betting, Carol, it's exploded in the U.S. since 2018. That was when the Supreme Court allowed such gambling to expand beyond Nevada. Some 36 states now allow sports betting, with the business generating more than $10 billion in revenue just over the last 12 months. That's according to the market researcher Vixio.
Well, we've got with us the head of the parent company of one of the dominant players in U.S. sports betting. Peter Jackson is the CEO of Flutter. It's the publicly traded owner of FanDuel. He joins us on Zoom from the U.K. Peter, so nice to have you here with Tim and myself. Let's get right to it. First of all, later this year, I think early next year, you're going to be doing a dual listing in the U.S. So you'll be traded on the New York Stock Exchange and the London Stock Exchange. Everything moving ahead as planned?
Yes, look, we're very excited about it. So the plan is that in Q1 next year, we will list our shares on the New York Stock Exchange. So American investors will be able to buy into Flutter at that stage on their own exchange.
So what was the decision behind that?
Look, it's something that we've considered for some time, and it's not straightforward. But look, we're very excited about it. I think it's going to be a great opportunity for American investors to invest in Flutter. It'll give us, access to that U.S. capital market, the deepest liquidity pool in the world. We know that actually having a U.S. listed asset will help us from a retention and attraction of talent in America. That's important for us as a business. And look, we are the world's leading gaming business, and being listed on the New York Stock Exchange feels like the right thing to do for us.
How do you see yourself kind of holding a high market share in the U.S. sports gaming market? You're going to have some competition. It's a pretty competitive marketplace, and some big players already
it's
there.
Never been easy. It's never been easy from the day we started. But we deliver the best product to our customers, and we believe that's what sets us apart.
So how concerned are you about the competition that you have, with DraftKings right now? Roughly 30%, 31% of the market, at least depending on, which analyst you speak to. How does that rivalry work? Talk to us a little bit about that.
Look, DraftKings and FanDuel were the leading businesses originally in sort of daily fantasy, and we've both managed to take that leadership position into sports betting.
And you guys were going to merge at one point.
Well, there was talk of that a very long time ago.
Yeah, back in 2017, right?
Yeah, but look, we were able to take some of the product advantages we have globally and bring them to the US audience. So the parlay product, which we've become very famous for, is something we'd invented in Australia, we perfected in the UK, and we brought to the US audience. And that's what's given us a real leg forward.
Can you explain that for people who are not,
gamblers?
Yeah, gamblers. I mean, this is confusing stuff.
Yeah, look, it's a relatively straightforward concept in that, if you're watching a game, so, if you're watching the 49ers playing over the weekend, you may wanted to have, a bet on the outcome. You may have thought the 49ers were going to win, but there may also be a couple of players who you wanted to highlight in the game who are going to score some touchdowns. There may be some passing yards you wanted to capture as well in your bet. And you can combine all of those outcomes into one parlay and put $10 on it and have fun watching the match and see if it comes in.
So it gives you kind of multiple plays or multiple bets, if you will, in one?
Yeah, exactly. You have to hit each of the legs, but if you do, you get much longer odds and then you win more money.
So Peter, what's the growth that you've seen in that on your platform?
Look, we've seen some very extensive take-up in it. If I look at something like the basketball season this year, around 80% of our customers have placed a parlay bet already in this basketball season. It's something that has really caught the attention of our bettors across the US. They enjoy it, and it brings real excitement to them when they're watching a game.
There must be regulatory challenges here, given that, gambling like this is only legal in about 36 states in the U.S., and then you have the whole European element here. Talk to us about tighter regulation, specifically in Europe. It seems like it's moving the other way in the U.S., but tighter regs in Europe. What's going on there?
We operate globally, so there's many different environments we participate in. In the UK, there's been some regulatory reviews of the gambling sector. We changed our position in the market at the beginning of last year, and it stood us in really good stead getting ahead of the regulatory changes. So we're now taking market share very significantly in the UK market. But around the world, all of our brands, whether it's FanDuel or Paddy Power in the UK, Sportsbet in Australia, we tend to have the leading positions in the market, and we're very focused on recreational customers. People who are spending £10 a week betting in the UK. So this is small stake stuff, and we take safer gambling very seriously. We want to lead the race to the top and make sure we provide all of our customers with a very safe experience.
Peter, I feel like we've been talking about online gaming for a long time, in the lead up to the Supreme Court decision, which ultimately came down in 2018, and then since then. What would surprise, you think, the Bloomberg audience about what's going on in this industry? Is it the growth? And if so, give us some numbers. What is it that would maybe surprise our investing audience?
I think there are several things that people are always shocked at when I talk to them about what we do. I mean, think about that match, right? When the 49ers played their conference rivals, the Eagles, in Philly. We have to sit there and calculate all the odds of all the different actions that the players can be undertaking real time. We're taking tens of thousands of bets from customers, and we have to assess how the probabilities are changing, take those odds, match them, and when customers decide to take their money, pay them out quickly. So it's a very complex set of challenges that we have from a data perspective. If you look at that game, there'll have been 1 trillion different combinations of things that people could bet on. So it's an incredibly complicated set of circumstances, and simplifying that for customers so they can easily find out what they want to bet on is something that's not straightforward. So if you look at the external references, we've been assessed to be the best operator in our space. Alison Krajcek would rate us number one, and we have been for 2 years. And having that leading product is really important to make sure that customers can cut through all of that complexity, find their one to bet on, and have some fun when they're watching the game.
Hey, Peter, what's the connection or the correlation with a strong consumer and strength in the economy when it comes to usage of your product? What do you see out there?
We've been operating for a very long time, as you were saying, in some of our European markets. And if we look at the sort of history from a macro perspective, whilst ever there's strong levels of employment, we see strong performance in our business. So around the world at the moment, we haven't seen any signals that any of the impact that we're seeing from a fiscal and macro perspective is impacting our business at all.
What about the weakness that you're reporting in Australia? What's behind that weakness?
You're right. We have identified when we announced our Q3s, we've seen some weakness in Australia. They had a very significant lockdown in COVID in Australia. I'm not sure how much your listeners have followed it. There were police on the streets making sure people couldn't leave their houses. It was a very difficult situation. So there's been a big COVID reversion in Australia. They're also pushing through some tax changes, and there's also some regulatory impacts. But Sportsbet, which is our brand in Australia, we're the biggest business. We're the market leader for recreational customers.
Right.
We just had the Melbourne Cup, which was it's the race that stops the nation. So I'm proud of what the team are doing, and the business will go on to grow in the future for us there.
We got to run. So glad we could check in. Peter Jackson, the CEO of Flutter, joining us on Zoom from the UK.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting the latest quarterly numbers out of software company GitLab. It is boosting its revenue guidance for the full year. That guidance beating the average analyst estimate. After ours, we got GitLab shares surging now by 16%. The Dow, the S&P, NASDAQ back to work Monday, all lower today with the S&P down 24 at 45.69, drop there of 0.5%. The Dow down 42 points, lower today by 0.1%. The NASDAQ Composite Index down 119, a drop of 0.8%. Russell 2000, though, had an up day, up another 1%. 10-year yield 4.25% with a 2-year that's yielding 4.62%. Gold right now, spot gold is at $2,029 the ounce, lower by 2%. We've got West Texas Intermediate crude down 1% today, 73.31 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as the COVID pandemic fades into the past, many things have returned to normal. The world of work has not. Companies, employees, and governments still figuring out how to adapt to lasting changes to corporate life sparked by widespread lockdowns that put millions onto a work-from-home schedule. At stake really worldwide aren't just norms for office life, but really the economic health of big cities as well, particularly in the United States. We have a great voice to talk to us about what's going on in the workplace environment.
Yeah, last checked in with him a little over a year ago. It feels like so much has happened, and since then, so much has been talked about. One company, one person who's at a front seat to all of this is the London-listed office space provider, IWG. We've got back with us Mark Dixon, founder, executive director, CEO of IWG. That's International Workplace Group. He's with us here in our Bloomberg Interactive Brokers studio, in town for the company's Investor Day tomorrow. But you were just telling us that you're also here because you were in the Midwest as well. Talk to us a little bit about the footprint that you have and where else you've traveled.
Yeah, look, U.S. is our biggest market. It's more than half the business. We've been here for more than 30 years in the U.S., but the growth is now really quite dramatic in terms of how we're growing the platform, how we're growing the number of buildings we have across the country. So I've just come from the Midwest, from Minnesota, where I've been doing site visits. But you know, we're growing the business about 50% growth rate in the US, and it's got the place with the highest take-up of hybrid working. And so it's very exciting. So Investor Day tomorrow, but very useful to drop in and have a look at what we're doing in the market.
So Mark, return to office, work from home, hybrid, what's winning?
Hybrid. So you have to imagine a new world driven by technology. So a lot of the narrative sort of thinks that things are going to go back to normal and everyone's going to come back to Manhattan. That's not going to happen. People can want to work at places near to where they live. They don't want to commute. So the elephant in the room is commuting. It's not. People are working from offices. They just want to do it locally. Hybrid is a combination of work from home, work from near to home, and come into somewhere like Manhattan or Chicago once a month, get together with colleagues, business reviews, collaborate.
So what does that mean for a market like New York City, for example?
For New York City, it'll need to reinvent itself. I mean, you can see it coming back here. It's probably a little over a year since I was last in New York City.
Yeah.
I mean, it's more vacant. I didn't think it could get more vacant.
You think it's more vacant than a year ago?
Oh, yes, absolutely. I mean, you can see it at the retail level, and then you could just got to look up in the buildings. I mean, look, I've been doing this for nearly 35 years, so I can tell, looking at buildings, whether they're occupied or not, there's a lot of vacancy, a lot of sublet. And, places like New York, very, very difficult places and expensive places, time-consuming places to commute to for normal workers. So unless you live here, it's not convenient. And especially downtown. If you go downtown, you've got that double commute. So where you have that, it's, that people don't want to do that.
It makes complete sense because I feel like for many of us who've come back to the pandemic, I like being actually back in the office. I'm so tired of commuting though. I'm tired of it. Like when you have that break that we did.
Bad news. You're going to keep doing it.
Yeah, I'm not giving up my card anymore, my commuting card. You work with the likes of or have Disney, Uber, Microsoft, BlackRock, Spotify, which got news that it's cutting 1,500 jobs. Earlier, we got that news. Disney earlier this year began the first round of 7,000 expected job cuts. Any of that working its way into less demand for what you are doing? Or help me understand.
The opposite.
What?
More demand. You see, what's happening is you've got, globally pretty much a difficult economy. So corporations are looking at ways to be more efficient, to get more productivity, to cut cost. So more and more, you have to imagine us as providing a platform for work and support of workers. At the moment in the US, as an example, we've got 1,200 buildings every state. We're adding 600 buildings next year. So you get this sort of work platform. It costs half the price.
Right.
It's near where your people want to be. And we've also do US airports, airside. We do railway stations, rest stops. So it's a work from anywhere. It's not just office buildings. And the future, a technology-powered future, is about being productive wherever you are.
Right.
And it's about getting the most out of a workforce. And that's what companies are looking for today.
So what kind of indicator are you? So if you know what I mean? If a company's looking to cut costs and tap into more of you, is that just a smart company, or is it a company feeling squeezed and they're looking to cut like, you know what I'm trying to understand? It is.
It's both.
Because I assume as they need more space, they're going to come into
Well, it's not. How they save money is they have less space. It's a bit like Uber. Okay. You don't have a car in every city. You travel to Chicago, you take an Uber, and you take an Uber when you need it. You don't have one sitting there all the time. And what we're doing on our platform, we've got 8 million people using it. One day you're in Chicago, the next day you're working from close to home. We also support nearly about 800,000 people that work from home. We have a whole product range that supports home workers. Mm-hmm. So it's about a technology-powered workplace that's available anywhere. Our job is to create productive workplaces so that people can do their best work.
But it's not co-working.
We do co-working, offices, we do work from home, we do drop-in, small little things like a phone box that you can use in airports. Do your Teams or
How did you watch the bankruptcy of WeWork play out?
Well, it was long, wasn't it? I mean, it's.
But they weren't wrong in their concept.
Absolutely not wrong. They were wrong in their execution.
Yeah.
I mean, I've been doing this business I started with one building in Brussels in 1989. We've now got just a little over 4,000. That's been pretty much self-funded. We've had very little capital put into the business, so we've reinvested capital. They, on the contrary, they've used a huge amount of capital. And so it's just a different discipline. Right idea, it's all about the execution. This is a detailed and difficult operational business, not easy. A lot of people misjudge it.
How does the business model, I'm a bit daft, how does the business model work in terms of you, because you get investor money, or how does it work? Because you don't own, because we were getting some clarification, you don't own real estate.
We have a platform. And that platform is a digital platform, a sales platform. And we have huge numbers of customers sitting on one side of the platform. If you own a property, you're an institution, you're a private owner, you want to put your property on our platform, you can do that, and we'll operate it for you. That's what we do. So we're working with the biggest institutions in the world, insurance companies and so on, who are putting property on the platform so that it's sold in a hybrid way. We're the middleman in all of that.
So you get a piece of the business.
We get a piece of both sides.
So you don't care if that property isn't rented out completely for the month.
We do.
Well, you do because you'd make more money off of it.
And we want our partners to be successful, so we're very focused on that.
Okay.
Do you have are you in any long-term leases? Is that
we have some, business? We have almost no long-term. We have leases, but all of them are short. We option long, and we keep them short. Because otherwise, pretty much a year we can get out of anything.
How has the interest rate environment impacted you, if at all?
Our net debt is small.
Yeah.
Next year, it would be about the same as our EBITDA, so about 1 times EBITDA.
But any of your customers who have properties, have some of them gone under, or because of the higher rate environment?
Some of them, very few have gone under. But then you get special services. We provide cash flow in a building, and whoever takes the building, they like our cash flow. So,
where are the areas of the world that you're concerned about in terms of economies, economic activity, the consumer?
I mean, I think there's not a global squeeze, but it's pretty much, I think there's a universal squeeze both on companies and on the consumer. It's pretty widespread. I mean, for me, and I've been in business nearly 50 years, how quickly interest rates came up has caught everyone, unawares, if you like, on the one hand. And that's caught businesses that have debt and that have taken out their debt, obviously at low interest rate, comes back higher, but also the consumer cost of living is squeezing them as well. So that's forcing companies to take action, whether, as you said, whether that's cutting people or cutting costs, and that's quite a good environment for us.
Mark, just got like 20 seconds left here. So based on what you're seeing, what you are doing, you've talked about some pretty impressive growth, especially with the U.S. market. Recession next year? Global recession, U.S. recession, very quickly.
I would say difficult year, small recession.
Difficult year, small recession. That means a lot because you definitely have like a front row seat in terms of what many companies are doing. Come back, please, sooner, more than
Thank you very much.
Mark Dixon is founder, executive director, and CEO of IWG, International Workplace Group, here in studio.
Well, let's get a check on world and national news. We got Nancy Lyons in the DC newsroom. Hey, Nancy.
Hey, Tim. The clock is ticking on aid to Ukraine, with National Security Advisor Jake Sullivan saying U.S. lawmakers need to act quickly.
I believe that any member of Congress who does not support funding for Ukraine is voting for an outcome that will make it easier for Putin to prevail. That is, a vote against supporting Ukraine is a vote to improve Putin's strategic position.
National Security Advisor Jake Sullivan, President Biden is seeking $106 billion for Ukraine, Israel, and other needs, but Republicans insist the U.S. border policy must be changed as part of that deal. Federal prosecutors are accusing a former U.S. diplomat of spying for Cuba's intelligence service. Attorney General Merrick Garland says the alleged crimes by Victor Manuel Rocha stand apart from many others.
This action exposes one of the highest reaching and longest lasting infiltrations of the U.S. government by a foreign agent.
Garland says Rocha, who was a former ambassador to Bolivia and was posted to Mexico, Argentina, and other countries, is accused of working for the Cuban government since 1981. The Supreme Court heard arguments today over Purdue Pharma's $6 billion opioid settlement. The government says the deal improperly shields the Sackler family members who own the company from opioid-related lawsuits. Bloomberg's Jonathan Randles with more.
The Biden administration is arguing that this deal that Purdue has struck with the Sacklers goes beyond what the Sacklers could get in bankruptcy because it absolves them for alleged wrongdoing that couldn't be absolved had the Sacklers filed individual bankruptcy.
Again, Bloomberg's Jonathan Randles. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, continuing to keep an eye on GitLab shares after hours. Stock taking off. It is up now by 16.55% after earnings. Software company GitLab boosting its revenue guidance for the year. That guidance did beat the average analyst estimate. And again, after hours, we do have GitLab shares up now by about 16.5%. A down Monday for the Dow, the S&P, NASDAQ as well. We did have Wall Street kicking off the week with losses, stocks and bonds down, and a signal that traders' aggressive pricing of Fed rate cuts may have gone too far. S&P 500 index down almost 25 points, a drop of 0.5%. Dow Jones Industrial Average lower by 41, drop there of 0.1%. The Nasdaq Composite Index down 119, a drop there of 0.8%. Cannot ignore the Russell 2000 Index of small cap shares up again today, up by another 1%. 10-year yield 4.25% with a 2-year 4.62%. Spot gold today lower by $42 the ounce to $2,029, a decline of just about 2%. And West Texas Intermediate crude oil today down 1%, 73.32 a barrel. Bitcoin certainly a major deal for markets today, surging 5.3% right now. Bitcoin 41,838 earlier in the day. Bitcoin was above 42,000. So what about the market outlook? Jimmy Lee is with the Wealth Consulting Group, and he was a guest earlier today right here on Bloomberg Business Week.
Our base case has been no recession. So if we don't go into recession and somehow we get this super soft landing that, you know, Powell's been trying to orchestrate, if that does actually materialize, then I think cyclical will start to do better again. And I think you see rotation into some of those sectors that have been lagging, like small cap, mid cap, even international.
And again, you can hear more of that conversation with Jimmy Lee on the Bloomberg Business Week podcast. Roche Holding paying as much as $3.1 billion for Carmot Therapeutics, a developer of the new type of weight loss treatments that has sparked a pharma industry gold rush. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It's like you knew what we were going to be talking about.
Charlie Pellet knows everything.
You know, you're just the gift that keeps on giving.
Lucky guy who gets it right once in a while.
You're just incredible. Charlie Pellet, none other than him. He's just amazing. All right, so he did talk about the latest deal when it comes to pharmaceutical companies kind of moving quickly, trying to either develop their own or buy it. And that was exactly what we just got from Charlie.
Yeah, okay, so let's talk a little bit about that. The possibility of Pfizer buying up someone, potentially to secure a place in the GLP-1 market. Lo and behold, Carol, we got a deal today. It was Roche Holding, though, that agreed to pay as much as $3.1 billion for Carmot Therapeutics. That's what we just heard from Charlie. And with more on the pharma industry gold rush, with us is Madison Muller. She's back here in our Bloomberg Interactive Brokers studio. She knows everything about these GLP-1 agonists.
Yeah.
Okay.
GLP-1 receptor agonist.
Yeah.
You got it.
So I'm pretty much a doctor now.
Yeah.
Yeah.
No, you're not. You just play one on YouTube and radio.
That's
and
funny.
You called it right, or I feel like we called it. Like we were talking off of Pfizer, right? That, you know, their second go didn't happen. So it's like, okay, what do they do? Do they need to buy somebody?
Right.
Well, it wasn't Pfizer who did it, but Roche did it today. What do we need to know about this deal?
Yeah, so this is, I mean, exactly what we were talking about last week. These drugs have sparked such a pharma gold rush that the companies that aren't yet in this space are looking for opportunities to get in on it. And so for Roche, that was buying a smaller company. That was Carmot Therapeutics, which is one of a handful of biotech companies, smaller companies that are developing next generation weight loss drugs or similar weight loss drugs to the ones that are already on the market. And these bigger pharmaceutical companies are kind of swirling now and looking for opportunities to buy up these companies and get in on the action.
So does the drug that Carmot Therapeutics has, or there's several, right?
Mm-hmm.
Do those work in the same way as
Yes.
the ones that we've been talking to you about for 6 months?
Yes, exactly. The same exact way. This gut
Injection
hormone,
too?
GLP-1 injection, and they have a pill also that they're developing that might be looked at in combination with a muscle preserving drug to sort of see if it can combat this muscle loss that happens with weight loss. So that's one of the things that Roche will likely be looking at with this deal as well. And that's something that other companies, Eli Lilly is looking at right now too, and Novo Nordisk potentially as well.
Are all these, and there's a couple of companies you're going to bring our attention to because I do think it's interesting. Is everybody kind of working on the same science?
Yeah, it's really similar sciences. You know, there's combination drugs. Some of the companies are looking at dual agonists, so GLP-1 and GIP, which is GLP-1 is Ozempic and Wegovy, GLP-1 plus GIP, which is two different gut hormones. That's what Mounjaro and Zepbound, Eli Lilly's drugs are. So some of the companies are looking at that. There's also these triple agonists that are GLP-1, GIP, glucagon, activating all of these different receptors.
Sew your mouth shut, right?
Basically.
Sorry.
I mean, yeah, those are the ones that are rivaling weight loss only seen with bariatric surgery so far in early trials. So it's like 30% body weight reduction.
It's interesting that you bring up the bariatric surgery because for a while, that was sort of seen as the way to lose weight and keep weight off. But what we've learned is that it doesn't actually keep weight off. There are many examples of people who've gotten this surgery who then end up gaining weight back.
Yeah, and I think it's another example of how obesity is a very difficult to treat disease, and we see that happen with when people go off of the drugs, they gain the weight back. So there's something going on it's difficult over a long period of time to see permanent effects. Like your body just really wants to go back to its set point, and it will fight and fight and fight to get you back to that point, and there really isn't like a permanent solution yet.
Madison, what I do wonder is with all this R&D that's going on at smaller companies, big companies, at some point do we kind of learn a little bit more about what creates obesity, and then are we somehow able to kind of figure out a really different fix or a genetic fix or something? Like I do wonder, like all the time and money that's being spent, that it's like, okay, these are really cool, but will it maybe possibly get us to something even different or better?
Yeah, I think that's the hope. I mean, there are some drugs that are earlier in development that are looking more at genes and genetics, and
by better I mean maybe not without so many side effects or something.
Yeah, less side effects, more precise, more, you know, they're saying that this next wave, maybe not, you know, in the near term, but a few years down the line, there's going to be a wave of sort of precision medicine approach similar to cancer with obesity drugs, and because there are a lot of different causes of obesity. That's something that we're learning too. There are environmental causes, genetic causes, and so this next wave of obesity drugs will hopefully be a little bit more precise, and we'll learn enough about the drugs and about obesity to have, you know, more specific drugs. Maybe Zepbound's better for one type of person, while Wegovy's better for another type of person.
It's like mental illness or autism. Like you understand there's a spectrum, right, of things. Because we promised that we were going to share some names, you've brought a couple with us. Talk to us about some of the small players that are kind of on your radar.
So there's Structure Therapeutics, Viking. We have Altimmune, and got to pull up some of the other
Zealand
ones.
as well, right?
Yes. Yeah, and it's interesting because some of these companies already do have partnerships with some of the big pharma companies.
Yeah.
Zealand, for example, is partnered with Boehringer Ingelheim, and Merck has some partnerships as well. So they haven't yet acquired these companies, but they are studying their drugs in combination with them and sort of seeing what happens.
What's interesting is Viking is up about 61% year to date. Structure is, God, I had it up here somewhere. It IPO'd, I guess, in February of this year. I don't have the number in front of me. Zealand, I think like all of these guys are like off and running, I think except
jumping
for
on all of the, I mean, and Altimmune was up, I think, last week or 2 weeks ago when they released data as well.
Yes, you are right.
How do you quantify the market opportunity for these companies?
Yeah, I mean, this is, for these small biotech companies, it's massive because biotechs have really been struggling sort of to get investors and it's just been a difficult environment for them. And so obesity is one area where they really can benefit. And companies, I've talked to a couple of companies as well who weren't previously studying their drugs in obesity, and now they are, or obesity-related conditions. So there's this company, Veru, that was studying a drug for breast cancer, and they have data that their drug also helps preserve muscle. So when they started hearing about the fact that people on these weight loss drugs were losing muscle while losing weight, they were like, okay, we're going to put our drug into studies in combination with Lilly or Novo's drug to see if it will help. So it's like there's so many opportunities for these companies
Because
to
they're a
jump
cocktail
in.
of some sort.
Exactly.
Or some kind of, it's just fascinating, and you keep us up to date on it, so we so appreciate it. Madison Muller, she's health reporter at Bloomberg News. Check her out, certainly at Bloomberg.com.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Starbucks shares lower again today, extending their losing streak for an 11th session, which is the longest rout on record for the coffee retailer. A JP Morgan analyst flags that alternative sales data signals a material slowing in November. Starbucks, of course, rallied in the first half of the month after management issued better-than-expected quarterly results, along with a bullish forecast for next year, but the stock has fallen for the past 2 years amid concern about still slow China data. Again, Starbucks shares down for 11 in a row, down 1.6%. There will be approval hurdles ahead as Hawaiian Holdings agrees to be acquired by Alaska Air Group for $1.9 billion in cash and debt in the latest attempt to consolidate the American aviation industry. Helene Becker is an airline analyst with Cowen and Company.
For people who live in the islands, they do tend to go either inter-island or to the West Coast. They don't really reach too much into the mainland. And if they want to, it's usually more than a one-stop flight. For Alaska, it gives them the opportunity to be bigger. I think the combined airline will have over 300 aircraft.
It would also capture more than 50% of Hawaii's airline market. Shares of Alaska down today by 14.3%. Hawaiian was up 192%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week. Let's get to Washington, D.C. now for a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 Newsroom in D.C. Hey, Nance.
Thanks, Tim. Israel is moving tanks and troops into Gaza. The focus from the Israelis is no longer just northern Gaza, but also southern Gaza, where many civilians were previously moved to avoid the conflict. Israeli Army spokesman Rear Admiral Daniel Hagari says Hamas is the reason the fighting has resumed, and he's promising Israeli forces will do what they can to minimize Palestinian civilian casualties.
We pursued them in northern Gaza. We're now pursuing Hamas in southern Gaza too. We will operate in maximum force against Hamas terrorists and infrastructures while minimizing harm to the civilian that Hamas places around them as shields.
Rear Admiral Daniel Hagari says Israel is urging the Red Cross to continue pursuing access to the remaining hostages to ensure that they are safe. Federal prosecutors have filed a criminal complaint accusing a former U.S. diplomat of spying for Cuba's intelligence service while holding top posts in embassies across Latin America and at the White House. Attorney General Merrick Garland says the alleged crimes by Victor Emmanuel Rocha date back to 1981, making it one of the longest-lasting infiltrations of the U.S. government by a foreign agent. The college football playoffs are now a federal case.
Republican Senator Rick Scott of Florida is demanding answers on why the Florida State Seminoles aren't in the playoffs. FSU won the ACC championship on Saturday, ending the season with a 13-0 record. This makes it the first time an undefeated Power 5 conference champion has been kept out of the playoffs in their 10-year history. The selection committee instead went with Michigan, Washington, Texas, and Alabama. In a letter to committee chairman Boo Corrigan, Senator Scott called the decision shocking and demanded relevant communications and votes into how it was made. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Carol and Tim.
All right, Nance, thank you so much. Nancy Lyons in our D.C. newsroom. All right. Hey, listen, one of the stories that we've certainly been kicking around a lot here on this Monday at Bloomberg has to do with Mark Zuckerberg. He is selling Meta Platform stock for the first time in 2 years after the social media giant rapidly rebounded from a tumultuous 2022. 2022 was really rough on this company.
Yeah, it was.
So he didn't selling shares.
Look what it's done since 2022.
Not too shabby.
We'll get to that in a second. Let's talk numbers first. So the Co-Founders Trust, as well as entities for his charitable and political giving, unloaded about 682,000 shares. That's worth about $185 million. That was in November through trading plans. The latest disclosed on Wednesday, according to data compiled by Bloomberg from regulatory filings. It's the first time entities that manage Zuckerberg's fortune have sold shares since November of 2021.
Yeah, what's interesting is more than half of the recent Meta stock sales came from shares controlled by their namesake foundation. The smallest portion of the selling spree, about 19 million, went to the advocacy arm of the Chan Zuckerberg Initiative. That organization has funded efforts to mobilize voters as well as to advance immigration reform. What's interesting is, listen, these are two individuals who are planning to give away 99% of their wealth. And so they periodically do sell. And if you think about the charitable part of this, which is where a lot of the selling happened, you know, if they have made donations or, you know, made promises, if you will, you know, they've got to do some selling of shares to kind of follow through on that.
A lot has changed since they pledged to give away most of their fortune. That was 8 years ago. The Chan Zuckerberg Initiative has $6.3 billion. It's led by both Zuckerberg and Chan. The stock has risen more than 200% since they pledged. to give away most of their
Stock's
fortune.
up 166% this year, and I'm looking at, if you go to Rich Go, I know this is a favorite function of yours.
Love it.
He is the
That's how I
ninth,
keep track of how much money I have.
according to Bloomberg, tracking the wealthiest individuals. Elon Musk is up at the top, followed by Jeff Bezos, but Mark Zuckerberg is in ninth place, $116 billion considered to be his worth. Down 1.7 billion today, but up more than 70 billion year to date.
Okay, not bad.
All in a
Top
year's,
10.
Yeah.
Look at that.
Not too shabby. Anyway, check it out. It's on the Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Hi, everyone. Bloomberg Business Week continuing on this Monday, December 4th, live in our Bloomberg Interactive Brokers studio on YouTube and, of course, on Bloomberg Originals.